All right, today I'm going to talk about support and resistance trading strategy that's going to help you find out when support resistance will hold price movement and it'll bounce off, or when price movement will go flying through support resistance levels like butter. And this is part of the continuing series of the Ask Barry video series, where I invited all y'all to go ahead and post any questions you had, and I would answer them. So this is one of the questions that came up, and it's a really good one, by the way. In fact, several people asked this, and I wanted to answer this one because it's so practical. All right, so what we're going to look at here is, first of all, let me just show you what I've got here in my chart. So support resistance levels, we're just going to use, for example, today, some obvious ones, which are swing highs and swing lows in the market, rather than get complicated with Fibonacci or floor trader pivots or whatever. Those things are good too. This technique that I'm about to share with you will work for any support resistance level. All right, but we'll keep it simple today, since what we really want to know is, will these levels hold or will the market break through them? So the concept is this. When price comes to a level, let me draw an arrow here. All right, so we're going to say, all right, so we've got a high here. And our question is, well, as the market comes back up to this high, will it hold that and bounce back down? Or maybe just consolidate? Or will it slice right through and go to the seventh heaven? All right, so that's the question. The answer is, one of the best ways to determine that is to look at what is the momentum of the market as it comes into a support or a resistance level. Because if the market's moving up on weakness, then it's most likely to bounce off of that, in this case, resistance level. If the market moves up with strength or momentum, lots of power, lots of buying, lots of demand behind it, then that's more likely to break through. All right, so that's the general principle. Step two, what can we use? What kind of tool can we use in order to determine whether there's strength or weakness in the market as it approaches those levels? So there's many different tools, but you can use your favorite, but I will give you some guidance here. I don't recommend using bounded oscillators such as RSI or stochastic or anything that is a bounded indicator, because once they get to the top of the limited range to the bottom of the limited range, they don't really provide good signals anymore. They just can't go any higher. So for example, if an indicator like stochastic is bounded from 0 to 100, then it's going to be a very limited use. It could still give you some good signals, just not as good as some others. All right, so what I'm using here today, and you can try different ones. There's no magic to this one. Frankly, there's no magic to any indicator. I'm just going to use the good old-fashioned MACD. It's very popular. Not going to do anything fancy schmancy. Just going to use pretty much the default values as most trading platforms have them. Okay, so I'll just show you that in case you want to pause that and look at that. Now, MACD has its own idiosyncrasies. So what we're going to look at here, and I want to show you, again, some details here. The dollars are in the details, my friend. So we've got the potential support or potential resistance level here. And so what we're going to look at is, okay, is there strength as the market comes up to that level? And the answer in this case would be yes. And the reason is because MACD is continuing to show momentum at that time. All right, so as it hits that level, if you look at the MACD, okay, your MACD line is up, your average is up. If you want to look at the histogram, that's up also. Everything's up. We got nothing but net. Nothing but net. That's what we like to see. Now, the question is, and here's where some nuances come in that are very important. Well, gol darn it, here we also had the same situation. In fact, let me take all that off so that we have clarity. I like to have as much clarity as possible. So here we had another high. And here we broke above it just a smidge, but this time it came back down. And what the heck, Barry? If you look at the MACD, it was going up. So again, look at that. And again, everything's up. Histogram's up. MACD, signal line, all that kind of stuff is up. Okay, so here is the issue, and this is where it's so important to understand your indicators. You've got to really understand what they're measuring. Remember, they're mathematical functions. So what do these math functions mean? Well, in this case, it's below zero. Okay, it's below zero. This is why it's important to note the zero line here. So what you have, as long as it's below zero and moving up, that does not necessarily mean price is going to move up. You have two options. Price could move up, or price could just kind of go sideways. So it's generally classified as a momentum indicator. And again, there's many momentum indicators. Use your favorite. But I like this one because it's not bounded. But one of the, again, idiosyncrasies is if it's below zero and it's rising back up, it might just be reverting back to zero. And if it is, then that means there really isn't any momentum going up at all. And so you get this kind of thing. So what we want to wait for is we want it to go up, but also be above the zero line. That indicates bullish momentum. All right, so that's the distinction, the dollars that are in the details distinction that you've got to have. And so that's why, again, very important to understand your indicators, not just throw them on a chart and look at lines. Oh, they're moving in this direction and moving in that direction. Come on, there's a lot more to this, guys. So you got to really understand what you're trading. All right, and again, this is just one element of an entire trading system. This alone is not going to make you money, but it is one good piece of evidence trading. I treat it kind of like a court case. You have to put together a lot of different pieces of uncorrelated evidence to create a preponderance of that evidence. And one thing is not enough, but you put all those things together and then you do have enough to at least give you a probability scenario. Obviously, we're never certain what's going to happen in the future. We're not predicting, but we at least have the odds on our side. Then at that point, we use risk management, money management, hedge our positions in case it doesn't go our way, or when it doesn't go our way, I should say. But this is a good one. So this is how we do it. Again, the basic principle behind all of it is when the market comes into a support or resistance level, is there momentum behind that price action? If so, it's more likely to break through. If not, it's more likely to hold. So that's the concept. Use the tools you want. Here I'm giving you one right now, giving you a little nuance on it to get you started. Try others if you have some others that you like. So, by the way, I am giving you one of my trade setups called the rubber band trade, and it is a complete little trade setup. I love this trade setup. I can teach it to you in less than half an hour. And if you'd like that little video, I'd love to share it with you. Just go to rubberbandtrade.com and it's there waiting for you. Just put in which kind of market you trade, and then we'll give you the video appropriate for the type of market that you trade. It's a little scalping trade. Great for quick little profits, super high win-loss ratio. Love to share it with you. Go get it. My gift to you for free, because that's something that I share with the entire trading community as my gift to help you get making some money before you spend any money. Okay, my friends, that's it. Any more questions you have for future videos, post them down, share the video with others, and have a great day.